Hello and welcome to this edition of the video market update from Orbex.com. There were many significant economic releases last week which had notable impact on the market, whether it's currencies, equities, and even commodities, while the main event was the Federal Reserve decision, which came in contrary to the market expectations. The Federal Reserve was supposed to give us what we call it a dovish hike. However, and instead, the Federal Reserve decided to stay on course with its promises for further rate hikes. In addition, the Federal Reserve also gave us few info about the potential reduction of its for the Federal Reserve balance sheet, showing a possibility to start the tapering with $10 billion a month, and soon maybe it might go up all the way to $30 billion a month in treasuries and in mortgage-backed securities. Yet this means that if the Federal Reserve is really looking to taper its $4.5 trillion of treasuries and assets, it needs at least 6 years to taper around $2 trillion. However, such info has also pushed the US dollar higher across the board, despite the fact that most of the soft and the hard data from the States were weaker than expected, much weaker than expected last week. Yet Janet Yellen also said that analysts should not also overreact about some data, especially inflation. This is despite the fact that inflation has dropped all the way from during for 4 months in a row. Therefore, we still believe that the US dollar index's rally, or the dollar index rally, is likely to be very limited, and we will talk about it, of course, later in this video to which level to watch. Another significant event last week was from the Bank of England decision. Despite the fact that the bank left the current policy unchanged as expected and as widely expected, the surprise came in from the votes. There are now a huge split between the members in the MPC. Three members voted in favor to raise the rates, while 5 members decided to vote in favor to keep the rates on hold. And this comes back on the back of the significant rise in inflation for the past few months, which also spiked to the highest level since 2012. However, the growth is at the lowest level since 2013. With this situation, it seems that the Bank of England is in a dilemma. Should they raise the rates to stop inflation, or maybe to cut it to support growth, or even to increase the stimulus package? For the time being, no one knows what's going to happen. Only time will tell, but we have to keep on track on the next upcoming economic releases. The new week is also likely to be very calm after many economic releases and significant events around the world last week, while there will be few events to keep an eye on, such as the Reserve Bank of Australia monetary policy meeting. The Bank of England also, Chairman Mark Carney is due to speak on Tuesday, which is very important. We have also the Reserve Bank of New Zealand decision, in addition to that, which will be on Thursday. And finally, manufacturing and non-manufacturing PMI from all over Europe will be released on Friday. This is it from the fundamentals part of this video. And now let's have a look at some technical charts. Beginning with the US dollar index as always, and finally we are trading within a very kind of like a tight range and some consolidation on the daily chart. This is of course also right after last week's hard data, which came in with a very notable disappointment, leading to a huge quick decline all the way down to 96.50s. However, the Federal Reserve decision made it, or gave it like a push higher all the way back to 97.40s. However, for the time being, there should be also some consolidation area and some resistance area at the same time around 97.70s, especially that technical indicators are close to being overbought. So that's why we keep also our technical outlook or our fundamental outlook for the US dollar to the downside. However, a break above the 97.70s would lead to another push higher. However, I don't believe that we might see any kind of a break above the 98 or 98.50s, especially that it's confluenced by the 50-day moving average on the daily chart, in addition to resistance or former support area. Therefore, there's still a possibility for another spike higher. However, this is likely to be very limited. Going to our also technical charts, including the New Zealand dollar. First of all, the Kiwi has made a very important move. Finally, we are back to the same levels that we've been talking about it since almost May 1st of 2016. Last week, the pair tried even to break above the 73 barrier. It couldn't hold, and then it closed the week all the way back down to below 73 or 72.40s. Bear in mind in the next few days that the Reserve Bank of New Zealand decision is due, and this might be one of the opportunities that I'll be looking at during the week especially if the Reserve Bank of New Zealand continued to intervene and needed the Kiwi lower. I would believe this would be an opportunity to another short ahead all the way back to the 50-week moving average, which also stands around 0.7124. So keep an eye on this on this line during the next few days, as it will be a very significant. Also, technical indicators are heavily overbought on the weekly chart. This would also still create the possibility for a downward pressure in the Kiwi. Aussie has almost the same scenario, but we haven't reached yet the resistance area that we're looking for. Again, the Moody's has downgraded Australia's biggest banks earlier this morning on Monday. However, I still believe there is still a possibility to test those two levels, 76 or even 77, 76, 70s or 77. Until then, I still believe that I'll be away from the market until I see some sort of a short possibility around those two levels in the next few days. The euro continued also to consolidate. Last week it tried also to break higher 12 or almost to reach the 13, but it failed because of the Federal Reserve again. This would open the way for another leg lower in the next few days. However, I would still believe that the level of 111 would still be the major level to keep an eye on. And that will be the level where buyers are likely to appear, especially that's a trend line also on the daily chart. Most of the bullish outlook has been stronger right now, especially with the 100-day moving average and the 50 above the 200-day moving average. So keep an eye also on the euro. I still believe that we might need to see some sort of another spike higher in the next few days. As for the British pound, nothing much. Last week, as I said in the beginning of the video, because we had a huge notable upside and downside due to many events, but the event of the Bank of England has led to some sort of a reaction to the upside, but at the same time it couldn't hold because of the Federal Reserve again. However, on Monday we had this bearish shooting star on the daily chart that would still keep the bearish outlook unchanged for the time being. And for the time being, I'll still believe that we might retest the 126.27 for now before the downside, or likely the downside is likely to continue even toward the 25.65 before we see any kind of a retracement to the upside. There's also the outlook is not really good for the British pound, especially with the Brexit negotiations is around the corner. Dollar yen reached some of our targets of last week, 109.16, but failed to reach the 108.32 on the daily chart. But at the same time, we're now trading in a tight range for the past 2 days. I still believe that there's a possibility to retest the 100-day moving average, 1186. That will be a possibility for this week, but I don't see more than that for the time being, especially on the weekly chart. It doesn't look really good. At the same time, technical indicators are close of being overbought. That's why I'm not suggesting any kind of longs in dollar yen. As for gold and silver, gold continued to decline all the way back. Right now we're testing the 1248, which is the 100-day moving average. I still believe that gold still has the potential for this year. Last week, as I said, we failed to break above the this year's high and continued all the way back down. Now the 50-day moving average is lower, or flat, but trading below the 50-day. I still believe there's a possibility at 1240 for buyers to reappear again once again at the trend line, which is confluence with the 200-day moving average of the daily chart. So keep an eye on this level, especially that also the technical indicators are heavily oversold. Finally, silver did not prove itself, as I said before. We failed also to stabilize above the 200, 100, and also the 50-day moving average in the daily chart. We touched the 61.8 from the recent decline, and then we're continuing all the way back down. Now, the only level that I would keep an eye on for the time being, two levels, which is the first one is I would look at the 1642 and the 1619 as a level of survive. Maybe if it managed to break through those two levels, we would like to see silver to break below the 16 in order to keep on declining. However, the technical indicators are not suggesting that, but I still believe also that silver needs to prove itself for the next few days, for the next few weeks, in order to regain its bullish outlook. This is it for this week. Thank you. I would like to thank you for watching this series of videos for the past few months, and in the coming weeks We will try to increase also the level of information and the content in order to give you the most important information to use it in your trading. Of course, if you have any questions or feedback, please also leave them below, as always, on YouTube, and I will try to get back to them as soon as possible. Thank you for watching. I'll see you once again next week. Have a good one.